So what is market geometry, guys? This session is all about market geometry, and I try to keep the sessions quite simple and straightforward for beginners, so it's not too daunting. Essentially, market geometry on the foreign exchange market refers to a trading style that uses geometric patterns to find an ideal setup. So it's very simple. We're using the geometric patterns to find a good setup to place. Okay. So far in these sessions, we've covered many patterns. So we've covered the bat pattern, butterfly pattern, crab pattern, and today we will be going into the Cypher pattern. Okay. So in the following sessions, we will complete it with the Gartley and the shark, and then we will move on to the alternate patterns. So you've got the teacup, you've got double bottom, triple bottom, etc. So we'll be covering all of those as well in the future. And then we will also cover entry indications. We will cover that as well, because, having an understanding of the pattern is all good and well, but we also need to have an understanding of where to enter, which would be the best entry point. Okay. So to start off with every geometric pattern that we've looked at so far in this session, we always need a strong impulsive move to start the pattern. Okay. And it's very repetitive, but the more you get used to this starting X to A, the better, the quicker you'll find patterns. What I want everyone to do, if everybody can do this from today until the next session, next week, is place your Fibonacci retracement tool on a strong impulsive move. So if you see a strong impulsive move in the charts, whether it's from news, whether it's from just normal, the market playing out as normal, place your Fibonacci tool from X to A. And I want everybody to get used to doing that, right? X to A is just from one point to the next point. It doesn't need to be from top to bottom, bottom to top. It doesn't matter which way it is. Just get used to placing your Fibonacci tool from X to A. And from these sessions, X is 100% and A is 0%. So we're getting used to that movement. We're getting used to placing it. Okay. Then we are looking for our first criteria when we're looking for the patterns that are building up, right? That are going to be established. So the first point being B, right? This is our first criteria. So point B, it must retrace between 38.2% to 61.8%, right, of the XA impulsive move. So this will make more sense when I do a live breakdown, but these points right now, if you just note them down, and we'll come back to them later on in the session. So from X to A, that just means that we've placed our Fibonacci retracement tool from X to A, so from the bottom of the pattern to the top. And then we're waiting for price to retrace back between these two percentages, these two values. Okay. So that's how we establish point B. Okay. And then we move on to criteria 2. Now, criteria 2 is point C. We're looking for price to then go from point B and, go in between, to extend between 127.2% and 141.4% of XA. So XA again being the Fibonacci placement from the X point to the A point. And then we're looking for that extension. Okay. Once we've met these two criteria, this is when we're looking to place our limits, right? Because we're looking for price to come back down to meet the final criteria, to meet the final point, which is D. Once we get to point D, So once we get to point D, there are two different criteria points here at this section. So I'm just going to exit out of that. So point D has 3A and 3B. So I've just placed them both on the same slide so everybody can see. So point D needs to extend to 78.6% of X to C, right? X to C, the placement being from X, this point here, of the Fibonacci retracement tool, all the way up to C, this point here, okay? So that's where we're looking for that, for D to fall on that percentage. And then the second confirmation for point D, we are looking for it to extend between 127.2% to 200% of BC, okay? So again, BC being the placement for the Fibonacci retracement tool. So you place it from the bottom here, which is B, to the C point here, okay? Once that placement has been met, once it's been placed, then you can look for the price to fall between these percentages, right? And then once all of these criteria have been met, we can then look to enter the market, okay? So I'm going to go back into slideshow. Perfect. So this is just a quick summary of the points themselves, okay? And then when we're looking for our entry will be at point D, okay? Our stop loss will be below X, point X. And then our TPs, our take profits, will be on point A and point C, okay? I'm going to go through some live examples now to show you just how it works when you look at it on a live chart and you're placing your fib tools, okay? So the example that I have here is USD CAD, okay? And this played out quite well in the week. And so I'm just going to place the Fibonacci tool first. Okay, so the first point that we're looking for is the first thing that we're looking for. If someone could type it in the chat, what's the first point that we're looking for? So when we're looking for any pattern, any geometric pattern, what's the first thing that we're doing? Where are we placing? X to A, okay? And what is the move that we're looking for? It's a specific term. Begins with an I. Impulsive. So we're looking for an impulsive move, okay? So once we get that impulsive move, we don't want something that is like consolidating, right? Sideways. We want something that's impulsive, right? Impulsive just means like a trend, uptrend, downtrend, okay? Once we've found that, then we can place our Fibonacci retracement tool. So from X to A, okay? So we're going to place that. I'm actually just going to delete that and do it again. I'm quickly going to go through the Fibonacci tool so that everyone has a bit of an understanding of the settings that I use. So let me go into the settings right here. Okay, so it's very simple the way this works. Let me move this so you can see. So let's start with background. So I have this background colors off. For me, it just keeps everything simple. So I can see the graph and I can see where price points are. And it makes it easier to read, right? And then with the prices, I have the prices off. Again, to make things simple, to keep it easy to read, right? Because if all the values are together, you don't really know which, you could miscalculate something on, it just keeps it simple so you can see those values. And then again, with the labels themselves, I place them on the right-hand side. So I don't like them on the left or the center, I place them in the plain area where I can see them. And then just in regards to where they are in accordance to the level here, I place them in the middle, okay? So it's very easy. You can also change the font size as well. If it makes it easier for you to read, you can do that. I just keep it on 12 because that's the default and I don't really need to mess with that In regards to the values themselves, they do have preset values. I changed the colors just so they're all the same color and it's easier for me to see. 50% I always have as the golden zone. I'll show you a reason why. I'll give you an example in a second after this. And these are the values that I have placed right now. Most of the values that I use, the main ones that I use are obviously 0 to 1 and the 50% zone. I also use the 618 is one of the main zones that I use, and the 786 is one of the main ones that I use as well. So they're the main zones that I use. However, for the geometric patterns, I do have additional zones on here as well that we can look at today. So I don't believe there's any other settings that we need to go through. Perfect. That's fine. Okay, so now with the Fibonacci retracement tool placed, if I could just come back to the slide and okay, so we're looking for point B. If somebody could type in the chat where we're looking for point B to fall, which values, which percentages we're looking for them to fall between. So it should be a bit easier because we have the Fibonacci tool placed already. So if you look on this side here, it's a bit easier. I know the values are different on compared to the slide, but this is just the way I have them on mine. It just makes it easier for me. So the value is 61.8% and 38.2%. Okay, so if you can see the values here, 38.2%, 38.2%, but 0.382, and then 61.8%. Okay, 61.8% right here. So it's fallen just between that. It's fallen on the 50% zone. Okay, perfect. And then for the next one, I'm going to bring that up too so everybody could see. So we're looking for point C. If someone could put in the chat where we're looking for point C to fall, that's okay, that's not a problem. So could someone put in the chat where we're looking for point C to fall between? So 127.2%, 141.4%. So as you can see here, it just about hit those percentages, right? Just about came up to those percentages, okay? And then for the last one, so for point D, remember that there's two criteria that needs to be met, okay? There's two different types of criteria that need to be met. So D needs to extend to 78.6% of XC, okay? So we're gonna remove our replacement tool because we're doing X to C. So let me just place that again. I always like to delete the tool because it just makes it a bit easier to understand. And with the settings on this one, I will need to untick the reverse pattern. Okay. Perfect. So just so I know that everybody's listening, where is the first criteria for point D? Where is D supposed to fall between, or extend to, should I say? So it's 78.6%, okay? So let me get that back up. 78.6%, okay? So we need to extend to 78.6%, okay? And then for the second part for point D, we're looking for another extension zone of 27.2% and 200% as well. And this is of BC, okay? So remember how I said I like to delete the zone, delete the Fibonacci tool? It's essentially because of that, because you can, you can make a mistake here, and then you could essentially just, cost one trade over a simple little mistake. This is why I always delete the Fibonacci retracement tool. So we're going from B to C. Okay, so let's do that. So from B, which is here, to C, which is here. Perfect. Does anybody remember, if someone could type it in the chat, where we're looking for point D in this second part? If someone could type that in the chat. There's 2 percentages that we're looking for price to fall between. If anybody could type that in, that'd be fantastic. Perfect. Perfect. Yeah. So we're looking for price to fall between these two zones. So and 200% as well. So from this point here to this point here. So 127.2% and 200% as well. Okay. So that's where we're looking for the price action to come to. So once that's been completed, we can then look to enter the trade. Okay. So again, just so I know that everybody's listening, where will we be entering the trade? At which point should we enter? And at which point should we place our stop loss as well? And again, take profits. Does anybody remember? So we enter at point D. Where do we place our stop loss? Perfect. Enter at point D. And the stop loss? So the stop loss will go below point X. Okay. Below X. Amazing. Below X. So when you say just below X, essentially, when you're placing your stop loss below X, you also want to look at the market structure, right? You don't want to just place it below X. Even though the pattern itself is the structure for the trade, you do want to look at other, market structure as well that's close to that. You want to make sure that, your stop loss is safe. And again, you need to stick to risk management. If your stop loss is way too big, you want to make sure that you're adjusting your entry according to your risk management. So you don't want to place like a stop loss which is if you're risking 30 pips, let's say, for example, but the stop loss is 60 or 50 pips, maybe you can bring your entry point down a little bit to adjust it to make it 30 pips, if that makes sense. And then in regards to the take profits, where will we place our TP1? Okay, perfect. You already typed it in. Good. So TP1, it goes at point A, which is here. And TP2 at point C, which is here. Okay. And you can see here that this pattern actually did play out. So it did actually play out, and it hit point A. And it came close to point C. It didn't surpass it, but it did get there. So if you're following the risk management and you're taking your trades seriously and you're managing your trades, so you're increasing your stop loss. For example, if you hit TP1, you can increase it just under or maybe just over, and you're taking partials as well. It's a good practice to have. It'll just make you a better trader to be able to do all of that. It will definitely make you a better trader. So I was going to show everybody a quick example of Euro USD, of the 50% mark of the Fibonacci retracement tool. So before I do that, actually, does that make sense to everybody? what we just went through with regards to the pattern. Does anybody have any questions about the Cypher pattern specifically, or about any of the geometric patterns? No worries, that's fine. That's not a problem. Perfect. So let's quickly move on. So I'm going to quickly. Okay. So I could incorporate that into the next session. So when I do, I will do it today as well. I will go into the Monero scanner and we'll look for buys and sells. It's simply the same process. You're just doing it, instead of doing it for a bullish pattern, you'll have the same retracements for a bearish Cypher pattern as well. Perfect. So let's go into the Fibonacci 50% zone. So this zone right here, I actually drew up quite a while ago. I don't know if anybody was on my first session. I did draw up this zone back then, and it has come down to this zone and wicked the zone, and it's starting to move in an upward direction. So yeah. So let me just find. So if you can see here where it says 50% fib, this is just an indication for me in the back of my mind where the 50% zone is. There is quite a lot of information on this specifically. I like to concentrate on Euro USD. And for those that weren't on my first session, I'm going to quickly show you what all of this means. It is quite busy. So in that session, in the first session, I did talk about the Elliott 5 wave. Okay. We spoke about certain requirements and certain criteria. For example, wave 2 to 3 needs to be longer than the longest wave, right? And the retracement of 3 to 4 cannot break 1, right? It cannot break the first wave. Otherwise, it makes it an invalid Elliott wave. It's not an Elliott wave at that point. So this is on the daily, by the way. And I showed everybody that the pattern that was created. So once this Elliott wave was formed, I actually placed these points. So point A, B, C, and D. And funnily, what happened was the pattern was created on this section here. Okay. And I was at this, it just goes to show that if you take harmonic patterns seriously, and you can get to a point where, you're able to see the patterns before they form, it is really useful, because before this pattern had formed, I had drawn up something called a choke, a change of character, and I'd drawn it up at this point here. And as you can see, the price action was in an upward trend. And when I'd drawn up this change of character, I was reacting to the price changing and changing direction. And then obviously when the pattern formed, when the butterfly pattern formed, obviously that was just another confirmation that price is looking to go in a downward trend. So again, I'm just going to tell a quick story about when I first started trading. I only knew how to trade Elliott waves, which is this right here. And when I got to the end of the Elliott 5 wave, I never knew what to do after that. I would just look for another Elliott wave in a different currency pair. But now that when I got into looking at harmonic patterns, so geometric patterns, it definitely developed my eye for what is to come after an Elliott wave, which is a correction, a 3-point correction. And if anybody wants a session on that, I can, but I can go into that. But essentially, it's like harmonic patterns, geometric patterns are corrective patterns. So it's essentially was, for me, it just made sense that after an Elliott wave, you would see a geometric pattern. Okay. And that's when I made that sort of distinction and that link that once I've ended on an Elliott wave, I can then look for corrective patterns and, trade in the market. So I was going to quickly show everybody the 50% zone. So the reason I sort of mark up the 50% zone, I mark it up on a larger time frame and I mark it up on a lower time frame as well, depending on where I'm focused on the chart. So for example, with this right here, so the Elliott wave had completed, and then we've gone from this low right here, and this is the high right here, right? So if I was to delete this one and try and place it again, so essentially this is a there, place it there. So the 50% zone falls around this point here of this low, the lower low and the higher high. So you can use these tools. You don't need to be have an A in maths, or you don't need to be good in science in order to get a good understanding of this. It just comes through experience. So like I said at the start of the call, practice placing the Fibonacci tool. Get used to placing it on impulsive moves, and then once you've got used to that, you'll definitely gain that experience to be able to look for these patterns. Another thing that I wanted to mention was you can find Elliott 5 waves within an Elliott 5 wave. It's a very sort of like, it's not complicated, but it looks quite simple if it's drawn up. Maybe in the next session I can do a draw up of that and I can show everybody how that looks, and then it'll make more sense for everybody. But again, this is one of the markups that I made. The markup primarily comes from it's a rejection zone. So you can see right here, price came down to this point, rejected quite a few times actually. And my original POI was 108,400. So I had placed a limit at this point. So this was my entry. And obviously price last week, I believe it was Thursday, I think it was Friday. It says it there. Friday, it wicked just above my entry point, right? It just wicked it right there. But it did come back down. This is why we always say don't chase the market, let the market come to you. So there was a lot of FOMO going on. This is why I listen to Trading in the Zone. It helps you understand that when a trade doesn't go your way, there's always going to be another opportunity. And this move just goes to show, that with patience, it can happen. So now I'm just waiting for price to shoot off, hopefully. So we will see the rejection from this point, but we do have a really good indication in that there is a really strong rejection. There's a really big wick right here. So that's a really strong indication that, the sellers are losing momentum and we're changing to a bullish market, right? So it's a really good indication. So in another session, like I said, I will be going into entry points a lot better, a lot, more in depth. So we can have a look at that in another video, another session. Now I'm going to go into Monara. So the good thing about Monara is it scans the market for you and finds these patterns. The reason I like to teach these patterns and the zones is because it can get you to a point where you can see the patterns with just by yourself. When you see the patterns, you can then start marking them up. And with Monara, it just makes it that bit easier to just come straight onto here and see all the patterns and get that double confirmation that it is a bat pattern or a shark pattern, etc. And it gives you this entry point and it gives you your stop loss and your 2 target points as well. So it's a very good system that we have here. As you can see here, USD CAD, the one that we was looking at, did play out, and it did hit target 1 and target 2. So that was really good. I'm going to try and find a few patterns that we can look at now. So let's look at incomplete patterns, actually. Let's try and look at a few incomplete patterns. So it's really good that Monara shows these incomplete patterns. The reason being is because you can keep an eye on these patterns forming, right? So you can essentially anticipate your placement, the placement of your trade, instead of already having complete trades, right? So let's go back to complete trades. It's already played out. This one's already played out. This one's already played out. This one has kind of already played out. So it's good to, it's good to have these to look at the incomplete patterns. So let's go back to some incomplete patterns and let's pick one so we can work with one to work with. Let's take I don't believe so. You can use your intuition on this as well. So you can you'll with experience you can gather more information and understand that do I think that gold is going to drop further? It's possible, like with the market, you never actually know what's going to happen, but it's possible that gold could drop to this point here and then shoot back up. If there's the thing that you want to look for as well, if there are any fair value gaps, FVG zones, imbalances in the market that need filling out, Monara could anticipate those. So Monara might see something that we don't. That's why Monara has put in these incomplete patterns. So let's go with, let me see this one, Euro USD. Okay, this is a good one for us to look at. I'm going to show why it could reject from there. So Euro USD is a shark pattern, bearish. So Euro USD. Let's find the shark pattern. It's already done. It's a bearish. Let's delete this one because this one we're not using. So this is really useful, this right here, because if there are multiple patterns on the chart, you can see that this pattern actually played out right here. So it did play out there. So we want this pattern here. Okay. So C has formed here. We're waiting for D to form. Okay. We also have the good thing about Monero as well is that we also have the support and resistance zones. So you can enable support and resistance zones, which is a really good feature in my opinion. So what we're looking for, now that we can see a potential shark pattern here, delete that. So we can see this forming. We already know the rejection from C has already happened, right? It could potentially turn back around from here. It needs to fill out the imbalances at this point. There are quite a few there. And so price has come back up here to fill this out. This imbalance here, as you can see there. Price has come up here, but has not necessarily filled out all the way here. There are a few zones that you can draw up. So again, you can use the support and resistance zone. And what I usually like to do is come to the tool, if I can find it, which is called a parallel channel. There it is, parallel channel. Go to the resistance right here, and you click, and you can draw up this zone right here. I personally would place it just on this wick. Okay. And then, so that's one zone that I would look at. Another zone that I would look at is because price could come up and reject here, or it could break this. It could break this level. And then the good thing about these levels that you're using is once price gets into your POI, your point of interest. So let's say price was to get into this level, right? Let's just draw this out. And let's say it did this, okay? Let's say price came up here, rejected off of there, which is perfect. And then it did like a, let's see, let's do this actually. Let's say price came to this point. Right. What you're looking for, again, I did go over it in my previous session. What you're looking for is a break of the low first, okay? So a change of character, a bearish change of character. You want to break the, so break the low, the high. So you want to break the high first, actually. So let's go back to this. Just at this point. So let's say it came here. And then I wish I had the trend tool, but for some reason it's not on here. I don't know if it's just me, I can't find it. So we want to break the high first. So let's say it's developed these highs. So this right here, it's an equal high right there. We break this, we break the high. We're still rejecting off of this zone. And then we break the low right here. Okay. So we've broken the high, broken the low. We wait for our re-entry, or our entry, should I say. We wait for that retracement to come back to our MB zones or LB liquidity block. Again, I'll explain the entry points in another session later on. And then we look to take the market down from point D. With any failed patterns, what we're looking for, again, is price action. So if we don't, this is one example. If price was to come up, let me get rid of, it's Let me get rid of the drawings. Get rid of this quickly. Okay. Perfect. So if price was to break and retest this level, we can then look to enter in for a buy, right, instead of a sell. So if price broke here and the candle closed and then it retested, retest is then we enter at this point, and then price could then potentially shoot back off, right? Why would it shoot? Why would it do that? What is one of the reasons it would do that? Again, coming back to previous price action, this wick only filled out, or this zone here filled out this imbalance, but then we also have this imbalance here that needs infilling. It needs filling out. So price could potentially break out from here to fill out this imbalance. Perfect. Is there any, does anybody have any questions about that? Anybody have any questions about what we just went through? Yeah, so the fib tool is drawn in the same points, okay? So we're always looking for X to A, okay? And we're always looking for the same percentage. It doesn't matter if it's a bearish or a bullish pattern, right? We're always looking, or Cypher pattern. Depending on which pattern you're looking at, you need to confirm those percentages, okay? So hopefully that answers your question. Next week I can do a session on the Fibonacci retracement tool. That's not a problem. That's completely fine. I will do that next week. I'm just going to quickly plug in my laptop. Just bear with me 1 second. Okay. So next week I can do a session on the fib tool. That's not a problem. I'll do that. Have I entered trades from Manara? Yes, I have entered trades from Manara. Is Manara only for incomplete pattern? I think I don't entirely understand the question. So you mentioned, is this only for incomplete patterns in Manara? The answer is no. You can look for patterns yourself, and you can use these sort of entry points for that. No problem. That's fine. Perfect. Perfect. Does anybody have any questions at all about this break and retest, or about the change of character? Again, the reason I've used this incomplete pattern is because we can then anticipate price to come up here. Again, we let the market come to us. Manara is, fantastic in that it shows us incomplete patterns. We can then let that price come to us. We can then look at potential entry points. Again, drawing this POI, and entering at whole numbers. So yeah, so next session I can definitely do it on the Fibonacci retracement tool. That's not a problem. That's fine. I will draw out the percentages. We'll go through the particular zones and the most important ones. Again, if anybody has any questions about the fib tool that they want answering next week, just send them over to me, and then I can incorporate that into the session. And then we can all learn together. with regards to this. So Euro USD is actually moving quite well from my POI. So it's not doing too bad. We can look at another pattern if we have time. Again, I don't believe that gold will come down any further than it already has, but you never know. The other thing I was going to mention, which I don't believe has been mentioned yet, there is really important news coming out today. There's a panel happening today with regards to BRICS. BRICS is essentially of united countries that have come together to move away from using the US dollar. So again, that'll affect the US dollar, which will affect the countries that it backs. So I believe it's 45 countries that the US dollar is tagged to, is pegged to. So make sure that, when we're placing trades, make sure we're taking risk management, we're using proper risk management and we take it seriously. Don't over leverage your account. Make sure you're using proper lot sizes. This summit is happening. It started today. I believe it's happening until the end of tomorrow. If you do have my FX book, or if you go into the so it's just here. Let me show everyone. Forex Factory right here. So if you go into Forex Factory, you'll see the summit is on here, BRICS Summit. Okay. So this is today. I believe it is tomorrow as well. There it is, BRICS Summit. So just be careful when we're trading this week, I think. BRICS Summit again. So they're just drawing up plans in regards to what is going to be happening. And I believe India made their first international purchase in rupees. I think that was last week. This news is significant, right? Because it just means a shift in power. If there's a shift in power, as we know with the currencies, it's all based around the strength. So if we look at this currency strength meter, so it's all based around strength, right? Currency strength. So if the US dollar goes down, and with BRICS being announced, if this loses power because it's being replaced from other countries, then it is going to have a significant impact on the market. Euro USD, how that would affect Euro USD, if the dollar loses power, Euro USD is going to fly. The same for gold as well. If I bring back gold on here. So it's the same for gold as well. Gold here. So even though this is saying that gold might come down as this incomplete pattern to complete it, if the US dollar loses power, gold is just going to keep going up. It's just going to fly. So we'll see what happens. The US dollar is obviously, the US is obviously aware of BRICS, and they wouldn't just let BRICS overpower them, and it's well established sort of currency in the market. So yeah, I appreciate you all joining today. I appreciate it is like a long detailed session. I hope you all got a lot of value from the session. I hope you all took notes. I hope you all got down these percentages. I will send out the patterns, the cheat sheets in the chat, in the Telegram chat. So again, if you're not in the Telegram chat, feel free to join. These sessions again will be uploaded to the YouTube channel, and feel free to follow me on Instagram as well, and keep in touch, and drop me a message. feel free to post your screenshots of patterns in the Telegram chat. And yeah, I look forward to the next session. And yeah, hopefully we can do something on the Fibonacci retracement tool as well, which will be amazing. Perfect. I hope you all enjoy the rest of the evening, and I will see you next week. Take care.